Hello and welcome to Business at 9. I'm Shubhani Ghara joining from Mumbai. My colleague Jude Sanith is joining in from Chennai. Now, 6 months since the US-Israel war on Iran began, the conflict has in fact entered a prolonged stalemate. But the diplomacy is now back in focus. From killing of Iran's supreme leader Ayatollah Ali Khamenei and devastating strikes on Iranian military infrastructure to an intense campaign of missiles and drones, the war has fundamentally reshaped the region. My colleague Sumita gets us more details on this.
That's right. It's been 6 months since the United States and Israel launched strikes on Iran. In fact, now, as we see what the situation is, well, it has reached stalemate. The Strait of Hormuz, that remains severely disrupted, and there is no clear path of how the conflict is going to end. Meanwhile, after military pressure, Washington is returning to putting economic pressure on Iran and its trading partners. And in fact, Trump very recently has stated that financial strength of the United States is going to move the country towards a very big victory over Iran. He's also indicated that the US is in no hurry to negotiate. Now, remember this change of stance as far as President Trump is concerned? Well, earlier he was pushing Iran and, of course, other members of the government were pushing Iran to negotiate. But now he's indicating that he's in no hurry to negotiate. Meanwhile, the US has unveiled sanctions or the plan, and that's going to target Iran's aviation, digital technology, shipping, gold and digital asset sectors. Meanwhile, Iran has urged the United Nations to assess humanitarian impact of these sanctions in a letter that was written to the UNSC. And in fact, the Qatari Prime Minister, on the other hand, is going to visit Tehran to meet with Iranian officials to revive negotiations. Remember, Qatar has played a very important role as far as this entire war and peace talks are concerned. It's been a negotiator. However, peace talks have yielded little. Well, what we also know is that Iran and Oman have claimed a framework was discussed to establish a temporary shipping route. Remember, because shipping remains disrupted massively, and that's having an impact on shipping prices. It's having an impact on inflation across countries and not just, on these two economies, the United States and Iran. So, of course, on the back of those talks and, the claim that Iran and Oman made, oil prices sort of dropped a little over the past couple of days. It remains to be seen where do things move on from here, whether the visit of Qatari, Premier, the Qatari Prime Minister to Tehran is going to yield anything. Will he be able to convince both Iran and the United States to start negotiations? That remains to be seen.
Well, moving on to US markets next. Wall Street is opening higher, led by strong technology rally after Nvidia delivered a blockbuster earnings beat and even raised its revenue outlook. And the Nasdaq is leading gains up 0.9%, while the S&P 500 and the Dow are both up about 0.3%. A resilient US labor market and its data is also supporting sentiment, with weekly jobless claims coming in much below expectations. Meanwhile, Brent crude is near the $88 per barrel mark, even as tensions in the Strait of Hormuz keep a geopolitical risk premium as far as oil is concerned. Investors are now looking to Jackson Hole for cues on the Fed's rate path. Sunidhi joins us with more details on the US markets.
So yes, let's talk about what is happening in the US markets and what is the trajectory of oil. In the US market, we are seeing a broadly positive trend in US equities driven by the strong Nvidia earnings, while oil remains above the $85 per barrel mark amid the West Asia tensions. Let's look at it one by one. Starting with Wall Street, all three major indices opened higher today, led by technology stocks, especially after Nvidia's earning. Nvidia's stronger than expected earnings and upbeat revenue outlook have lifted sentiment across the board for tech and semiconductor space. Meanwhile, lower than expected jobless claims also pointed out to resilience in the US economy. Moving to oil and geopolitics, crude prices have rebounded, with Brent moving around $88 per barrel. However, they are still lower compared to the earlier prices, which hovered around $90 per barrel. Markets continue to monitor tension around the Strait of Hormuz, which is a key route for global oil and LNG supplies. However, diplomatic efforts are still underway, but there is lack of a clear breakthrough and uncertainty around US strategic petroleum reserves releases, which are keeping risk premiums high for crude. Coming to US Treasury yields, the 10-year remains around 4.66%, while the 30-year is above 5.18%. So the key event to watch going ahead will be the Federal Reserve's Jackson Hole Symposium, where commentary commentary on inflation, interest rate, and the broader monetary policy outlook could set the next direction for the global markets.
Thanks for that. Now, the latest U.S. jobs data points to continued resilience in the labor market. Initial jobless claims came in at 203,000 below 208,000 estimate, while the continuing claims stood at 1.778 million, also below expectations of 1.792 million. The 4-week average of initial claims was 205,500. The data, in fact, will be closely watched by markets as the investor assess the Federal Reserve's interest rate outlook.
Moving on to some geopolitical action next. Prime Minister Narendra Modi is all set for a key Central Asia visit, beginning with Uzbekistan, where he will hold delegation-level talks with President Shavkat Mirziyoyev. Prime Minister Modi will then travel to Bishkek for the SCO summit, where security, counterterrorism, connectivity and economic cooperation will be key priorities, with even a bilateral meeting with Russian President Vladimir Putin very much on the cards and expected along the sidelines. For all this and more, my colleague Sumita joins us with an update on what exactly this visit is all about. Sumita, take it away.
That's right. The Prime Minister is also to participate in the SCO summit in Bishkek in Kyrgyzstan. In fact, he is going to be delivering his address on September 1st, and besides his address, the Prime Minister will also be holding bilateral meetings with his SCO counterparts, some of the SCO counterparts, including with the Russian President Vladimir Putin. And this is something that the MEA confirmed. So, of course, both the sides are going to be reviewing the entire gamut of bilateral ties and, of course, the progress that's been made in several aspects, several pillars of bilateral ties between India and Russia. Now, as far as India's priorities at the SCO summit are concerned, remember, as always, India is going to be focusing on the security aspect of the summit, and of course, it's going to voice its opposition against terrorism, separatism, and transnational crime. Economy is going to be another pillar, along with unity, connectivity, and opportunity. Remember, these have been, or at least some of these aspects have been touched upon by the Prime Minister in his earlier speeches at the SCO summit. And of course, let's understand there is another leg of the summit, another leg of the visit of the Prime Minister to Central Asia. In fact, he's going to be visiting Uzbekistan before he goes on for the SCO summit, where the Prime Minister will be holding delegation-level talks with the Uzbekistan president. And of course, the MEA in a briefing suggested that, of course, there are ties which could expand in sectors that includes critical minerals, IT, pharma, education, because we cooperate on all of these domains. So, of course, these will be explored further on how trade, how investment, how B2B, business-to-business contact, space, technology, critical minerals, investments and mutual cooperation can be increased as far as these sectors are concerned at a time of volatility.
Right, Sumita, thanks so much for that. Now, S&P retains India's sovereign ratings at BBA2 with stable outlook on the back of the strong growth dynamics and policy stability. However, the global agency warns that fiscal weakness remains Achilles' heels in India's sovereign rating profile. Akanksha Kumawat joins in with the details.
That's right. S&P Global Ratings has affirmed India's sovereign credit rating at BBB for the long term and A2 for the short term. And the outlook on India's long-term rating remains stable. Now, S&P India says India's strong economic growth, policy stability and infrastructure investments continue to support the India's credit profile. In fact, the ratings agency has also believed that these factors should help India withstand some of the near-term challenges. However, there are some concerns on the growth front. S&P expects India's GDP growth to slow down to 6.6% in FY27 due to higher energy prices and challenging agricultural conditions. But remember, despite this moderation, India has averaged annual GDP growth of around 7.9% over the last 5 fiscal years from FY22 to FY26. And going forward, S&P expects that India's GDP growth to average around 7% annually over the next 3 fiscal years. Now, coming to the fiscal fiscal situation, S&P says India remains committed to fiscal consolidation, although there could be some fiscal slippage. The general government fiscal deficit is projected at 7.3% of GDP in FY27 and is expected to come down to 6.6% by FY30. And at the same time, India's net general government debt to GDP is projected to decline to 79.3% by FY30 from 85.4% in FY25. And importantly, S&P has also indicated what could trigger it as an upgrade. The agency says India could see a rating upgrade if fiscal deficit narrow meaningfully and the net change in general government debt falls below 6% in GDP. So overall, S&P remains positive on India's growth outlook, but it had also highlighted that the government needs to keep reducing the fiscal deficit and debt.
Now, the Ministry of Coal has reviewed the coal supply situation for thermal power plants. The Standing Linkage Committee held a meeting with the key stakeholders, including officials from the Ministries of Coal, Power and Railways and the CEA and Coal India. Prakash gets us more details on this.
Well, amid monsoon-related disruptions, the Coal Ministry has reviewed the coal supply situation to thermal power projects, a very significant development. In fact, the Standing Linkage Committee has reviewed the current coal supply situation to various thermal power projects based on their completion dates and, of course, the kind of disruptions they are facing. The Standing Linkage Committee has held a meeting with the stakeholders, officials from the Ministry of Power, Ministry of Coal, Ministry of Railways, Central Electricity Authority and Coal India Limited attended the meeting. The committee has approved the extension of coal supply agreements for NTPC's thermal power plants in Barauni. Along with that, the coal linkage has also been approved for DVC-CIL Power Private Limited's 1600 megawatt thermal power projects. Along with that, coal agreements have also been approved for state GENCO's thermal power plants. In fact, coal linkage agreements have also been approved for state GENCO's in Uttarakhand, Tamil Nadu and Maharashtra under the Shakti policy, and this is primarily based on their completion date and the kind of disruptions they are facing. A very significant development and important amid the ongoing disruptions, supply-related disruptions due to monsoon-related impact. And therefore, various projects have been reviewed with the stakeholders, and based on the feedback, the Standing Linkage Committee has approved the extension and, of course, fresh linkages to these thermal power plants.
Well, with that, we're slipping into a very short break, but don't go anywhere because Business at 9 will be back on the other side. So keep staying tuned to ET Now.
Economic cooperation. The second one is practical avenues for cooperation in the financial sector, including cross-border payments, financial stability, fintech, and capital markets. There is considerable potential for our financial systems to work together more closely and facilitate greater flows of trade, investment, and also remittances. The third area, we explored opportunities for wider international and multilateral cooperation on issues of shared interests. This included areas such as critical minerals, cooperation on issues of shared interests.
Right, now moving on, Tata Motors has unveiled a new master brand for its passenger vehicle business, Tata.Cars. The new identity brings its entire portfolio from hatchbacks, sedans to SUVs and EVs under one name. Now, Tata Motors says the move is aimed at reflecting India's evolving mobility needs. Let's listen in to an exclusive conversation that I have had with company's Chief Commercial Officer, Vivek Srivatsa, on the company's new brand strategy.
Tata Motor Passenger Vehicles is a new demerged entity.
Right.
We are a standalone company by ourselves. But also, I think we've been achieving quite a few milestones in the past, but we are also looking at it as a seminal point where we reboot for the future. in recent past, you have seen we have announced openly our ambitions: 20% market share, 30% EV penetration, whole host of new products to come. And we thought it's the right time to create an independent, clear, customer-facing brand identity for ourselves, which makes it very simple for consumers to understand who we are, but also gives us a platform for all the future tech, future products, future powertrains to get accommodated into one overarching brand identity.
Right.
So we thought it's a good time to do that.
Right. And then what about, the company name Tata Motor Passenger Vehicle will still hold,
Yes.
will still stand,
Yes.
right?
The corporate name, which is Tata Motor Passenger Vehicles, remain for all statutory purpose, for all stock market related legal purposes. That remains. It is one of those instances where the company name is remains the same, but the consumer facing, all consumer facing touch points, we have a more customer friendly brand name, which is Tata.Cars. So all our digital platforms, social media handles, website, retail presence would be Tata.Cars.
Right. And
Yeah.
also there is a new tagline with it, nothing's too far, that goes with Tata.Cars. So, of course, the clear objective was to stand distinctly from the commercial vehicles business, the demerged, after the demerger. Tell us more about, creating this identity, and, obviously you must have reached out to your consumers, obviously you must have conducted market research. What were some of the insights that you arrived upon after, speaking to the consumers about the newly formed Tata.Cars?
Yeah. So the objective was twofold. Of course, create a brand name which is very simple and easy to understand. In many ways, consumers say that they bought a Tata car, So Tata.Cars was as simple as we could get, but also provided that platform for us for the future to be very broad and flexible. But our promise, we had to really dwell deep into who we are and where the country is. And you will have to indulge me a few minutes if I just explain it, going back to where we started. I think very well, Tata Motors, Tata Motor Passenger Vehicles, has always provided unique solutions to consumer problems. Going back to our first few cars, in the 90s, the roads were filled with really archaic kind of cars, and at that point of time we launched the Sierra, which really made consumer rethink how mobility could be. Come closer to the present, 2020, when nobody imagined electric mobility, we started off with the Nexon. And why we keep doing that is twofold. One is what is good for the country. Second is what does the consumer want. Right. And like more solutions, even consumers don't know they have that issue, but we kind of solve it for them, and then they realize how things are. EV mobility is a great example. Right. We were the only ones talking EV. Every single consumer had to be earned and convinced. Right. But today we are looking at an industry level penetration of 7%, and growing every day. EV awareness and penetration is growing. We were the only company talking about EVs for 3 years, and now all manufacturers are coming out with
Everyone is
EV.
getting into the ring.
So these are two examples on our overall approach.
Right.
Tata Motors.
Right, now moving on, government sources have clarified on the National Company Law Tribunal's approval of the repayment plan of SL Group founder Subhash Chandra. Government sources say the order does not mean banks have written off 99.97% of the 22,000 crore in loans. In fact, the 22,000 crore figure represents claims admitted against Chandra in his capacity as a personal guarantor for loans taken by several SL and Z-linked companies, not debt personally borrowed by him. Kuldeep is getting us more details on this. Kuldeep, tell us more.
Well, yes, the government sources has clarified, especially because there were claims that the banks have taken 99.97% haircut on over 22,000 crore of loans to SL Group. Now, the government source is saying that this is not correct. And in fact, Chandra personally did not borrow this money of 22,000 crore. It was the loans that were given to the companies linked with the SL Group. And in fact, only around 2,574 crore of claims relate to loans where Chandra's personal guarantee was given at the time of original borrowing, and most of the guarantees were provided later as additional security. So therefore, the sources said that 22,000 crore admitted claims figure should not be presented as 22,000 crore originally lent on the strength of Chandra's personal guarantee. And in fact, they also stated that that the principal borrower remains separately liable, and the repayment plan envisages around 1,494 crore of payments by the principal borrowers, in addition to 6.25 crore from Chandra's personally. So creditors also retain recovery pathway against securities and other available assets of these companies. And Subhash Chandra's statement also claims that companies have paid 43,000 crore till now to the creditors. So the government, apart from this, has also given some data about the IBC's broader recovery record, and sources stated that creditors have recovered around 4.32 lakh crore through approved resolution plans up to March 2026. And the recoveries were 116.85% of liquidation value and 94.56% of fair value. In fact, sources also refer to an IIM Ahmedabad study which found that resolved firms recorded 76% growth in sales and 50% growth in total assets and 50% increase in employee expenses, meaning higher employment, and 130% growth in capital expenditure. Well, specifically talking about Subhash Chandra case, so as we know that this matter came to the NCLT Delhi in 2022 when Saman Capital moved against Vivek Infracon's loan default of 170 crore, for which Subhash Chandra was personal guarantor. Now, there was split verdict in NCLT Delhi, and then it was referred to the tiebreaker judge, who now supported the repayment plan which was proposed by Chandra, and post that this all the statement, the claims were made. Now the government has come out with a statement.
Well, thank you so much, Kuldeep, for joining us with that all-important update and breaking it down for us. But on that note, it's about all the time we have on the bulletin tonight. So from Shivani and myself, thanks so much for watching, and it's goodbye and good night for the moment.